Oh, there we go. I figured it out. Okay, so happy Tuesday, second trading day of the week. So far, so good, right? Gold's been pumping as expected. If you watch my analysis video, I post in this Discord, we knew it was going to potentially pump. So we definitely were not short bias, that's for sure. There were a lot of signs pointing toward gold finally finding buyers. No, I took gold trades. Oh yeah, you know it. We have limit orders in place, right? I have the swing trade gold. I have the swing trade. If you go to Daniel's swing trades in the Discord here, anyone can see it. Check out that last gold swing trade I set up. Sniper entry right here. I'll show you what it looks like. So this was the swing trade setup. Right there. Oh my goodness. Can you believe that entry? Perfect. It was right there. Probably a couple ticks of drawdown. So yeah, and the reason why I like that level, I can show you why I like the level. Okay, so first of all, finding sellers around 3,400 is psychological level. We knew there was going to be sellers there, so we run. Oops, I have to go to a lower time frame. Sorry. Where was it? Where was it? Here we go. So the previous run here, right here, right? Consolidation, expansion. We run that fib level. Come on. We run that fib level right there, right? Because we know sellers are going to be at that psychological level. So as soon as we find sellers, we can mark the fib, and then we can plan for a retracement, which was right in the golden zone as per my analysis. You can go look at it yourself. And yeah, the entry was right there. So we had just a beautiful entry, and this thing still in the profit. I think I have my TP. I have my TP like, oops. I have my TP set to somewhere around here. I think I might set it at 34.50 just because I imagine we'll find sellers there, or 34.60. We'll see. Anyway, I'm not going to go off too much about it, but that was kind of the idea there. We're going to talk about the PFK Alpha. We're just letting people roll in here. The PFK Alpha, okay. Don't you worry. Okay. Let's kick it off. So the first thing that we should mention with the PFK Alpha strategy is that it is a day trading strategy, right? We use it for, prop firms and stuff like that, to get some higher value entry models with specific strategic risk parameters. Okay. You can, if you want, you can trade it live on your accounts too, but everything I do is kind of in the context of prop firm trading because, my name is Prop Firm Kid. So just be aware of that. So the logic for this is pretty simple. What we're looking for is trend-based momentum on the 1 hour chart, right? And then on the lower time frame, we're looking for an entry with that momentum after a pullback has happened and buyers step back in. Okay, so we're getting it at a discounted price relative to the previous momentum, right? As you can see, so these two EMA lines here are the 9 and the 20 EMA. So same thing, on the 1 hour chart, we determine our momentum bias by looking at the 9 and 20 EMA. As we can see, very bullish, very clean. Areas like this, you have to be cautious, but because they're not super squished together, they're still kind of valid. When they get really squished, you have to be a bit more careful here, right? But they had some good separation, so the momentum's still valid, even though it's just consolidating So So yeah, so when we're looking at the 1 hour chart, we're looking for momentum bias, okay? And then all we're doing is we're looking to go with that direction. Now, I will say that I want to show you something on the higher time frame on the 4 hour chart here, guys. So I'm just going to squish this together. This is super important. I showed this to the VIP members earlier in the week, before this breakout happened. But there's a range that we've been kind of stuck in for the last 2 months here. It looks like this. It looks like this here. Now, when I do a range, I like to see a couple fake outs because it validates the range. If there's a fake out and it gets attracted like gravity back into that range rather quickly, that helps prove the existence of the range, right? Because range can be very subjective sometimes. So this was the range I marked out. Now these 2 weeks or week and a half right here was actually not great for the PFK Alpha because it's so choppy, but it wasn't great for any day trader or anybody really. Like everybody that I was talking to, all sorts of traders were really struggling on gold during these choppy market conditions. And this is the 4 hour, right? If we were to break this down to the lower time frames, the price action on like the 5 minute candles was very choppy, very whipsaw like as well. So you just have to understand that sometimes the market conditions aren't going to favor you as a trader, right? And the point is to make money when it does favor you. Okay, so that's what we're trying to set ourselves up for. You know, be ready, be in the market once it starts going in your favor. And as we can see this week, that was one of those moments so far, right? So, yeah. So if I zoom out here, we can see, okay, yeah, these last 2 weeks were difficult, but the PFK Alpha, even during this little move here, was extremely profitable. Even with this little bearish sell-off, we had like probably an 85 to 90% success rate catching this move short. And another really nice thing to understand is, you know, we were catching a bunch of moves short, even though if we look on the daily, overall it does look rather bullish. So that can be the problem if you're just forever bullish as a day trader. You're going to really feel the pain when you have these weeks of pullback, right? So you have to be careful to just be forever bullish on gold if you're a day trader. You know, swing trader, different scenario. But day trading, you got to be careful. Okay. So that was a beautiful little catch. Now, if we did well with this entry model, with this little tiny sell-off, imagine when it's trending just for a short amount of time, like a week, 2 weeks here, imagine how well it does when we're trending in moments like this, right? These long, clean moves to the upside. It does very well. Okay, so just be aware that it's not going to be, no strategy is going to be running hot all the time. That's not the way trading works. Okay, the point is to get your profits when it is running hot and mitigate your losses when it's running cold. Don't tilt, mitigate your losses, stay cool, know that your time is coming, and when the market gives it to you, then you take it. That's all we can do. Okay, so okay, so let's just start with this concept. Okay, so I've explained, you know, the idea is trading with the 1 hour momentum, and on the 5 minute chart, we'll get to that. Okay, the very first thing we want to kind of look for here are we want to mark out some key levels on the higher time frame just so we're aware of them. So the one thing that especially student alpha Sean likes to do is he really likes the Anchor VWAP, which is a tool on TradingView that we can use. You can find it on the left hand bar here. It's called Anchor VWAP. And you have to manually place it at certain levels and it will anchor to the candle. So this is the all-time high here. We're going to anchor it to that just so we have it on the chart, just so we know what level it's at. And currently it's at like 332, let's say 3320. Okay. It will shift there. It will shift slightly as you move timeframes because it anchors to the close of the candle of whatever time frame you're on, but it's relevant on every time frame. And the other thing we could possibly do is put one here because there was obviously some kind of catalyst that just caused gold to go to the moon right here, right? So we could anchor right here. Okay. So as you can see, the two Anchor VWAP levels that I've chosen, they kind of do align in a general zone. So it's nice to be aware of that zone, just because sometimes it is respected as well, right? As we can see, it was very respected right here. You know, it was respected here. There's a bounce. Here it broke through, but obviously it came back into that range and it was respected here. So it's just nice to be aware of that. That's all. I'm not saying we're trading out of it. I'm just saying it's good to be aware of it so that when we're setting up our day trades, we don't have our take profit running straight through a potential key level like that. Okay. The other thing I like to do is mark up a few more key levels on the 4-hour chart. I'm just going to delete this here. And this is a good practice for any trader, marking out key levels. Key levels can be, you know, key levels can be a multiple things. It could be the Anchor VWAP. It could be a previous price point where buyers stepped in over and over and over again, right? What I like to do is psychological key levels. So the biggest one we just looked at was 3,400 on gold, which is right right here. Let's go to 3,400. Let's mark that out. I'm just going to mark it out right here. Okay, 3,400 there. Okay. Now, if you don't think psychological levels are relevant, I'll show you on the 5-minute chart here. Even though gold's pumping, right, on Monday, as soon as we hit 3,400, we find sellers, right? So if I had placed a trade, for example, on that EMA crossover we talk about on the 5-minute for the 9 and 20, right here, right? A bullish crossover. Well, then my TP has to run through this key level, right? And that's not ideal. That stop loss is huge. Let's just say we set up the trade like this. Let's give it an example. Let's say we're setting up the trade 1.5R like that, right? That's not ideal. We generally want to wait for some kind of relevant pullback before we continue going long, because we just don't want our TP to have to blast through this thing if we can avoid it. Okay. So anyway, yeah, so back to the 4-hour chart here. That key level I'm aware of. The only other key level I'd be aware of is like, oh man, gold's still pumping. Get over it. What is it doing? That's crazy, eh? Beautiful. Is I would say this previous swing high. We're see 3450. That's exactly last time. That's another cycle. That's a psychological level and also a technical level, right? We found sellers right at 3450, and then it just dumped after that. So very important to be aware of this level as well. Okay. So that's all I'm really going to do. If you want, like, yeah, you don't want to mark your charts up with too many crazy lines. The only other one I kind of like is 3350 or 3,300. Okay. But price is so far away from that right now that, you know, it's not really relevant. So I'm not going to mark it up just for the sake of keeping the chart clean. Okay. Okay, so what we do basically once we've marked the key levels, we go to the 1-hour chart here. And what we have the 9 and the 20 EMA. Okay, and what we're looking for is we're just looking for what's the current bias for the day or the current bias that we're looking. So we're looking for momentum. And we can tell just by these EMAs they're healthy, they're moving upward. So we're only looking to go long here, right? As long as it doesn't interfere with this key level. So, you know, ideally, you enter in below, you get some entries well enough below this key level so you can get your profit and get out for the day trade. But yeah, just to keep it simple here, the 1-hour chart is, we're looking for that momentum. So this would be bearish momentum here. This is choppy, obviously. This could be considered bearish momentum. This is bullish momentum, right? This is kind of choppy. You kind of want to let those EMAs expand out a bit before you're looking for sells in this situation. Same with buys here. So you kind of get a feel for it the more you use it. This here was starting to get valid. Obviously, something happened, some kind of news which spiked price up, which would have been a headache. But we can see here, this is the market conditions I was talking about. That was late last week, where it was just crossing, super choppy, very difficult to get any valid entry through this situation. So until you get some clean price action, that's clear one direction or the other, it's better to just avoid trying to enter in the market from the PFK Alpha, right? It would be better to enter in the market off of some kind of key level or price point. Like if you wanted to take a trade off this Anchor VWAP, that would be more valid than trying to chase some entry model. So, so once we've determined the momentum here, let's take a look at the 5-minute chart. We dropped down to the 5-minute chart, okay? And like I said, once again, what we're looking for is we know the bias of the direction we want to trade in, and now we're just looking for those nice clean pullbacks, and then sellers run out of steam, for example, because we're looking to go long. Sellers run out of steam, and buyers step back in, cross these EMAs over, signaling that buyers are back. Let's continue with that 1 hour momentum. So I think to start the week here, let me just see. Yes. Okay, perfect. So the Monday started right here. Well, Sunday, technically. This is the market open. I'm just going to mark that so we can see to start the week. So it was around here. Okay. Oh, yeah, there's the gap right there. That's the market gap. Let me zoom in a bit so it's easier for you to see. There we go. So that was the week start. Now, if we go to the 1 hour chart, we can see that where that blue line is, we can see we started the week bullish in a very healthy way, right? We wouldn't have looked for any shorts this week whatsoever, just because we have all of this bullish momentum on the 1 hour. Okay, so let's go back down to the 5-minute here. Okay, so we'll go back to that spot, and we'll just kind of run through some examples here of the crossover. Okay. So our very first crossover of the week was right here, a couple hours into the Asian session. You know, healthy crossover. I like how we swept the lows of the daily open. That was nice. Okay. So when I get a crossover like this, I kind of look at previous price action a little bit, right? And I determine, hey, is there anything that I should avoid here? And currently not really, because I can set my stop loss up like this. So this is how I would set my stop loss. So I go long, right? You know, we get the candle close here, it pulls back. So long somewhere around there. You don't have to rush it. It's a 5-minute chart. You have time to do an analysis. If you get a crossover, you don't have to feel like you have to press that buy button right away. It's very important you do your analysis. It's going to make you a better trader long term anyway. And what we can do first is we go to the ATR, right? So that's average true range indicator. Pull it up on your trading view chart. And this is kind of how we determine a good range for our stop loss, okay? So it's this red line here. Let me just go back here. So around the time of this trade, it was around $6.5. Now, I like to zoom out a bit, and I kind of like, instead of using the exact ATR, I like to look at the average swing low of this ATR and the average swing high. So right now it's like, I'll move this here. Right now, the average swing low is around, I'm just going to say $7 because that's closer. $7 to $11. $7.11. Okay. So you can set your stop loss customizable anywhere between $7 and $11. And that gives you a nice, variance for stop loss to really set up your trade based around market structure. Okay. So what I would do here in this situation is I would set up the trade long, right? Let me just close the ATR here. And then, like I said, gold, $7 to $11. In this situation, because we have a swing low right here, it's not too extreme. We can actually set our stop loss at around that $7 mark. There's no reason that we really need to go lower than that. It's good. So it's good to stay within reason. You don't want to go super tight, because the tighter you go, the bigger your lot sizes are going to be if you're risking 1%, for example, right? So if I'm risking 1% on gold here and my stop loss is $4, well, I have to use a lot more, like a bigger lot size on a 100K account. Then I'm gonna pay more for spread costs, commission costs. I'm gonna be more exposed to slippage, all that terrible stuff. Okay, and then prop firms are gonna flag you for over lot sizing, over risking, and tell you you're a gambler and deny your funding. Okay, so it's always nice. It's always good to be reasonable with your stop loss size with any prop firm, because it sets you up for a good day trading range rather than some kind of scalp. And scalping, the probability it is not in your favor for scalping because of all the different costs of opening a high leverage trade like that. So with the risk reward on this strategy, I always recommend between 1 to 1.5 and 2R. That's kind of like the area I like. Now, in this situation, I would likely just target this previous swing high on the previous day right here. That's reasonable to me. It's not greedy. It's well within my 1.5 to 2R. And that's nice. And then if we do find sellers again here, then I'm out of the trade. It doesn't matter. And this is obviously, in hindsight, we know this thing's pumping, right? But when you're day trading, especially with your challenges and stuff, like, you're not swing trading. You don't hold these trades and try to catch the whole move. The point is to get in the market and out of the market and then look for another setup, right? That's how you stack up the wins. So this is how I would set up the PFK Alpha trade exactly in real time here for this situation. So hopefully that helps puts a whole visualization on the process for you guys. We can look at the other one here. Okay, so let me just delete this one so it doesn't confuse us. I'll just delete that. I'm going to keep this here, okay, just so we know it's there. Now, same thing. We get a nice bullish crossover here, okay, and here. Let's just go with this one because it's a little bit easier. This one wouldn't have lost, by the way, because the drawdown after this crossover was only, let's say, a crossover here. So the drawdown on that crossover was only $3 max. So you're never going to do a stop loss on gold for $3 with this entry model. So you don't have to worry about that. But let's just go with this entry because they're about the same price anyway. So let's say we get the crossover. I look at this thing and I'm like, okay, potentially let's take a long. I'm not going to go long yet. I'm going to do a quick analysis. The first thing I'm going to do too is I'm going to make sure, okay, there's no key levels around that I've marked out on the 4 hour. I'm going to go to the 1 hour real quick here. I'm just going to make sure that the momentum looks good on the 1 hour chart. So let's go over to that. So this would be around this time here, right? So the momentum looks very healthy. I'm not worried about that. It's not too choppy. They're not squished. It looks very clean. So go back to the 5 minute. Everything looks happy for me. And I lost my chart. There we go. I'm making you guys dizzy. So we have an entry model there. And now for my stop loss, there's a couple things, right? For my stop loss, we had a really nice healthy pullback, which is a good sign after the initial pump. But I'm looking at this previous swing low, being considerate of that. So it's nice to have a little bit of a buffer below that swing low. Now, this swing low here is kind of far away from entry, so it's not something we can really avoid. So you just have to take that into consideration. If we come back down and make that double bottom, or we sweep below this previous low for liquidity before continue up, that's just the nature of the game. That's going to happen sometimes. Okay, nothing's going to be 100% win rate. So what we can do here is remember the 1 hour ATR was between around $7 and $11. Okay, so we can set this thing up, somewhere in here, right? Somewhere in here. Now, I personally would probably like to set it below this open price. And the reason for that is if I pull up the open price here, right? The open price is a nice indicator to have on your chart. You can just go to indicators and type in open price, because sometimes it often acts as a good support system. So it can just be an extra line of defense on your stop loss, right? So I would set this thing to, like, let's say an $8 stop loss on gold. Okay, so that's a very nice day trading range. when you're setting up your day trade. Now, for my TP, we have this zone here, right? That was a previous, supply zone, but we can't avoid that. Obviously, I can't make a trade like that. It's going to be terrible, if you're trading like that. Actually, that's how a lot of retail traders trade. They don't set up their trade like this, but they will close it like this. So I would like to look for, any reason where we could do a 1 to 2, any reason we could do a 1 to 2R in this situation. And I don't see anything really that is going to stop me from doing a 1 to 2R here, just because there's no resistance to the left of me. If this thing's either going to hit my TP or stop loss, in my opinion, right? I think it has potential to hit the TP more than it does the stop loss here at a 1 to 2. So that's why I'm going to set up a 1 to 2. I'm not going to go higher than 1 to 2, even though obviously in hindsight we can see, it would have worked out great. But once again, we're day trading. We're not trying to hold these trades for days in a row to pass the account in one trade. That comes with a whole bunch of issues. So, and then a lot of the time markets are usually a little bit more choppy than this anyway. So if more often it will work out for you if you get out as fast as you can on your day trade rather than holding just because you're greedy and you want more profit. Now, one thing to think about here, think about being live in this trade. Let me just go back to a replay. Okay. Let's say we're live in this trade and you're like, oh yeah, look at that. We're already at a 1R. Price is pumping. I love my life. I'm making so much money. Oh, it almost came up to TP. That's awesome. This is real time, right? You're watching it. And then you're like, oh, that big black candle. And now that fear kicks in. You're like, ooh, big black candle. It's going to reverse. It's coming back down to hit my stop loss, right? That's what you initially think. I'm going to lose all of this profit. And this is what separates good traders from retail traders, because they don't instantly close their trade the second sellers show up. So they're giving away a bunch of profits every trade, right? So it recovers a little bit, right? Almost hits a TP again. Oh, and then sellers step back in. So most traders are going to sell here. Most traders are going to sell here in this area. They're going to close their position here. Now, the issue with that is this situation isn't too bad because at least it's not down here where we're getting a negative risk to reward. You're still in a positive risk to reward, but over time it can really tax you to death, right? If you close it too early rather than just holding it and just letting it play out. Now, sometimes I've had it too where a price will come up. It'll come up and it's doing great. Literally misses my TP by like $1 and then it dumps. It happens. It's rare, but you remember it. The problem is your brain remembers that pain. So now you have that fear like in your bones, and you have to really learn to just push back on that a bit, right? So I like to hold, and I like to let my trades play out unless news is coming or unless the market reset's coming where I will close the trade. Okay. So as you can see, obviously, we had to pull back, but it did work out, right? So that's just the psychology, the emotions of going through the trade. These waves are happening. Usually you don't even get this lucky with a strong move. Usually it chops up, right? That makes it even more difficult because if it chops up, people will start exiting their trades way too early at a negative R. And then over time, your losses are bigger than your wins, right? You can't make money like that. So that's just a little tip there for trading psychology. Okay. So yeah. So that's the thing there. And then let's do one more here as I want to use an example, and then I got to get going as it's been half an hour. I like hanging out with you guys, but I'm busy today. So we have a crossover here, right? Now this is where we can really put together our key levels into play, that 3,400. So we had a really healthy pullback, really strong, right? And then we had a crossover, and that would be a textbook indication that, okay, we have a potential long here, because as you can see, if I put a line here right at that crossover, this blue line, let's go to the 1 hour chart. And if we look at the 1 hour chart here, where that blue line is, we can see that these EMAs are very healthy, very bullish, right? But because this is such a major psychological level, we go back down to the 5-minute chart, this trade is better to avoid until some more structure forms around this previous high, like a double top or a stronger sell-off. Because if I set up this trade here, like this, let's say we enter somewhere around there, and this is the swing low. Let's go through the process. We check the 1 hour. 1 hour looked good. This is the swing low. Get rid of that candle. And so we can set our stop loss below that swing low. That's totally fine. You know, $7 would be fine there. There's really no other reason why we need to go too much further than the 1 hour ATR. And now look what we have to go through to win this trade at a 1.5R at the minimum is just, we have to go through this insanely strong level where sellers already were so present because of the psychological level. So that's why, you know, you have to be selective. That is why this strategy isn't purely mechanical, because you have to do an analysis on price action, right? You can't just take a long just because EMAs cross over. If you could take a long just because some EMAs cross over that align with higher time frame bias, everybody would be rich, because that is so simple, isn't it? So a better solution is just to find a really strong reaction, let price come down. And as you can see, we had a crossover here, right? And this crossover is, this crossover is $10 or $11 from that psychological level. So this would be very valid. This right here is such a messy crossover still, but we're still so close to that level, right? It's still only, so I'm just avoiding running my TP through this level at all costs until I'm far enough away or until I break in above it, right? So this was $10. It's still probably going to be a bit too tight, right? But that's up to your discretion. That's right on the border. This one I would say is healthy enough here. A crossover like this is healthy enough right here. So this trade could easily be set up like this, because we still know that we're bullish on the 1 hour, right? We can double check, but we know. So right there. And then there's nothing to the left here, which is nice. So we could go the very minimum ATR again, $7. And that now you can really, just to avoid this level, you know, in this situation, I'm going 1.5 max. That way I have like plenty of room before we have to retest this 4,200 psychological level. Yeah, I'm feeling a bit more confident about that. And another thing I like too, when you're setting up a long, you kind of feel like price is going to be attracted toward that key level again. Test it, right? So, yeah, that's great. And then we have a crossover here that we'd want to that we could get in on because it's around the same level, right? And then we broke through, and now we're just waiting for some sellers to come in, because there's no other valid entry models here after we broke that level. There was a nice pullback here, but it was so strong initially that there was no crossover. So it would be difficult to find an entry here just based off of the PFK Alpha, right? There's different entry models you can go with if you're looking to catch this breakout. But like, for example, if you're looking for a breakout of the 4,200, a little retest, you know, like we have here, breakout of the 4,200, a retest, and then you could go long. That's a whole different type of entry model strategy. So I'm just referencing the PFK Alpha for today, so I'll keep it at that. But yeah, hopefully that helps. Yeah, it's been 30 minutes, guys. Couple things. Those that are not in the VIP, we're gonna reopen the doors sometime middle of August. We're just focusing on the members that came in early. We're making a bunch of adjustments in the VIP to make sure everyone's gonna find a lot of value in there. So just a heads up, if you're waiting for that, then I'll make announcements in here when it reopens. We have like 170 people in there, something like that. So a good chunk of guinea pigs for me. You're my guinea pigs. Yeah. Okay. All right, guys. I have to take off. I have a bunch to do. So yeah, appreciate you coming out. Hopefully that was helpful. And yeah, I will talk to you guys in a bit. All right. Peace.